Warren Buffett wakes up every morning and does something that most people would find incredibly boring. He doesn't check stock prices. He doesn't make trades. He doesn't attend meetings. He sits down in his office in Omaha and he reads. For 5 to 6 hours a day, he reads annual reports, newspapers, trade publications, books. He's been doing this for over 70 years. And when people ask him what's the secret to his success, what's the one thing that made him one of the richest people in history, he points to a stack of papers and books and says, read 500 pages a day. That's how knowledge works. It builds up like compound interest. Most people hear that and they think it's just a nice quote, inspirational, but they don't actually do it. They don't believe that something as simple as reading could be the difference between staying where they are financially and multiplying their wealth 10 times over. Because it seems too easy, too accessible. If reading was really the secret to getting rich, wouldn't everyone do it? And here's the uncomfortable truth. Reading isn't the secret to getting rich. But the specific way you read, what you read, and what you do with what you read, that's what separates people who build extraordinary wealth from people who stay stuck in the same financial position their entire lives. Let me be very clear about what we're talking about here, because this isn't about reading novels for entertainment. This isn't about scrolling through news headlines on your phone. This is about deliberate, focused reading with a specific purpose, to build a mental model of how money actually works. Most people go through life with a broken understanding of finance. They think they understand money because they earn it and spend it. But earning and spending is not the same as understanding how wealth is created, how it compounds, how it's preserved, and how it's destroyed. And without that understanding, without that framework, you're navigating financial decisions blind. You're making choices based on intuition or emotion or what your friends are doing. And those choices, over decades, they compound into financial mediocrity. Warren Buffett didn't start out rich. His father was a stockbroker, so he had exposure to financial concepts, but he wasn't handed millions of dollars. What he was handed, what he gave himself, was an education. At age 7, he read a book called 1,000 Ways to Make $1,000. At age 11, he read every book about investing in the Omaha Public Library. By age 19, he had read Benjamin Graham's The Intelligent Investor, and it changed everything. That one book gave him a framework for thinking about stocks, not as ticker symbols or gambles, but as pieces of businesses. And that mental model, that way of seeing the world, that's what allowed him to turn $10,000 into billions. Now. You might be thinking, okay, but I'm not Warren Buffett. I don't have time to read 500 pages a day. I have a job. I have a family. I have responsibilities. And that's fair. Most people don't have 6 hours a day to dedicate to reading. But here's what almost nobody realizes. You don't need 6 hours. You don't even need 1 hour. If you read for just 20 minutes a day, focused reading on the right topics, you will know more about money and investing than 95% of the population within a year. 20 minutes a day is approximately 20 to 30 pages, depending on your reading speed. That's about 7,000 to 10,000 pages a year. That's 15 to 20 books a year. And if those books are the right books, if they're teaching you how money works, how investing works, how businesses work, how psychology affects financial decisions, you will have built a knowledge base that fundamentally changes how you make every financial decision for the rest of your life. Let me break down why this works. Because it's not just about information, it's about mental models. A mental model is a framework for understanding how something works. Most people don't have good mental models for money. They think in terms of salary. How much can I earn per year? What's my hourly rate? What's a good salary for someone my age? But wealthy people think in completely different terms. They think in terms of assets and cash flow. They think in terms of compound returns. They think in terms of opportunity cost. They think in terms of leverage and time horizons. And these aren't innate ways of thinking. Nobody's born understanding compound interest or opportunity cost. You learn these frameworks by reading, by exposing yourself to how successful investors think, by seeing the same concepts explained from multiple Angles until they become second nature. Here's a concrete example. Most people look at a stock and they see a price. Apple is trading at $180 per share. Is that expensive or cheap? They have no framework for answering that question, so they either guess based on whether it feels high or low, or they look at whether it's gone up or down recently, or they listen to some talking head on CNBC. But if you've read the right books, if you understand how to value a business, you have a framework. To look at earnings, to calculate a price-to-earnings ratio, to compare that ratio to historical averages and to other companies in the same industry, to think about the business itself. Is it growing? Does it have a moat? Can it raise prices? Is management competent? And suddenly, what looked like a random guessing game becomes a rational analysis. You're not smarter than other people. You just have a better framework. And that framework came from reading. Warren Buffett talks about the concept of a circle of competence. He says that you don't need to be an expert on every company or every industry. You just need to know the boundaries of what you understand, and you need to stay within those boundaries. But here's the part people miss. Your circle of competence isn't fixed, it grows, and it grows primarily through reading. Every book you read about a new industry, every annual report you study, every biography of a successful entrepreneur, every deep dive into a business model, you're expanding your circle. You're adding to the universe of opportunities you can recognize and capitalize on. And over a lifetime, that expansion is worth millions of dollars in better decisions made and mistakes avoided. Let me give you a specific example of how this plays out. Imagine two people, both 30 years old, both earning $70,000 a year. Person A doesn't read about money or investing. They put their savings in whatever their employer's default 401k option is. They don't really understand what they own. They panic and sell during market crashes because they don't have a framework for understanding what's happening. They make emotional decisions. They buy high and sell low. They pay high fees because they don't understand what fees are or how they compound. Over 30 years, they accumulate maybe $800,000 by the time they retire. Not bad, better than nothing, but not wealth. Person B reads for 20 minutes a day. They read books about investing, about business, about psychology. They learn about index funds and expense ratios. They learn about dollar cost averaging and tax loss harvesting. They learn about the power of staying invested during downturns. They learn about compounding and time horizons. And because they understand these concepts, they make different decisions. They choose low-cost index funds. They maximize tax-advantaged accounts. They stay invested during crashes. They avoid panic selling. They recognize opportunities that person A doesn't see. And over 30 years, they accumulate $2 million, same starting salary, same time period. But one person built a knowledge base and the other didn't. That knowledge base was worth $1.2 million. And it came from reading 20 minutes a day. Now you might be thinking, okay, but what should I actually read? Because there's a lot of garbage out there. There's a lot of get-rich-quick books, a lot of hype, a lot of bad advice. And you're right, the quality of what you read matters enormously. So let me give you a framework for what to read and why. First, read the classics. The books that have stood the test of time. The Intelligent Investor by Benjamin Graham. Common Stocks and Uncommon Profits by Philip Fisher. One Up on Wall Street by Peter Lynch. The Essays of Warren Buffett. Compiled by Lawrence Cunningham. These books teach you fundamental principles that don't change. They teach you how to think about value, about risk, about markets, about business quality. They're not about hot stock tips or timing the market. They're about building a framework. Second, read annual reports. This sounds incredibly boring. And honestly, it is boring. But it's also where you learn how businesses actually work. Warren Buffett has said that he's read thousands of annual reports in his life, and that's where he developed his understanding of what makes a good business versus a bad one. You don't have to read every annual report of every company, but pick a few companies you're interested in. Companies whose products you use, Companies whose business models you want to understand, and read their annual reports. Read the letter to shareholders, look at the financials. Try to understand what they're saying. At first it'll be confusing. You won't understand all the terminology, but over time patterns emerge. You start to see what good management looks like versus bad management. You start to see what a healthy balance sheet looks like versus a leveraged one. You start to build pattern recognition. Third, read biographies of successful investors and entrepreneurs. Not for inspiration, though that's a nice side effect, but to see how they think. To see what kinds of decisions they made at different stages of their careers. To see what mistakes they made and how they learned from them. The Snowball About Warren Buffett, Steve Jobs by Walter Isaacson. Shoe Dog by Phil Knight. Pour Your Heart Into It by Howard Schultz. These books give you case studies in decision-making under uncertainty, and you learn from their experiences without having to make all the same mistakes yourself. Fourth, read about psychology. Because here's something that most people don't realize. Investing is not primarily about math or analysis. It's about psychology. It's about being able to control your emotions when markets are crashing. It's about being able to resist the herd when everyone else is panicking or getting greedy. It's about understanding your own biases and blind spots. Books like Thinking Fast and Slow by Daniel Kahneman, The Psychology of Money by Morgan Housel, Influence by Robert Cialdini. These books teach you how your brain works, how it makes mistakes, how it can be manipulated, and how to make better decisions in spite of your psychological limitations. And fifth, read widely across disciplines. Read about history, about science, about technology, about different industries. Because the best investment insights often come from making connections between different domains. Buffett partnered with Charlie Munger, and Munger is famous for reading across disciplines. He reads about physics, biology, psychology, history, everything. And he calls it building a latticework of mental models. The more models you have from different fields, the better you can understand complex situations. And business and investing are fundamentally complex, multidisciplinary problems. The person who only knows finance will miss opportunities that someone with a broader knowledge base will see. Now let's talk about the habit itself, because knowing what to read is one thing. Actually doing it consistently is another. And this is where most people fail. They read one book, they feel motivated, and then life happens and they stop. The book sits on the shelf, they mean to get back to it, but they never do. And 6 months later, they've forgotten most of what they read. So how do you actually build this as a daily habit that sticks? First, make it non-negotiable. 20 minutes a day, every day, same time. For most people, the best time is first thing in the morning before the day gets crazy. Wake up 20 minutes earlier, make coffee. Sit down, read before you check your phone, before you check email, before anything else. This is your time to invest in your financial education. Second, start small. Don't try to read for an hour if you're not used to reading. Start with 10 minutes. Build the habit. Prove to yourself you can do it consistently, then expand to 20 minutes. The consistency matters more than the duration. 10 minutes every single day is better than an hour once a week, because the habit is what compounds. The daily repetition is what builds the knowledge. Third, take notes. This is crucial. Don't just read passively. Have a notebook or a digital document where you write down key insights, quotes, ideas, because the act of writing helps you process and remember, and it creates a reference you can come back to. Warren Buffett keeps files of notes and ideas he's accumulated over decades. Charlie Munger has said that he can't remember anything he didn't write down. The writing is part of the learning process. Fourth, apply what you learn immediately. Don't just accumulate knowledge for knowledge's sake. When you learn a new concept, find a way to use it. Learn about dollar cost averaging, set up automatic investments, learn about tax loss harvesting, review your portfolio for opportunities, learn about a new industry, research companies in that industry, The application reinforces the learning and makes it concrete rather than abstract. And fifth, track your progress. Keep a list of books you've read. Keep a journal of insights and how they've changed your thinking or your decisions. This serves two purposes. One, it's motivating to see the progress. To look back after a year and see that you read 20 books about money and investing, that's real, that's significant. And two, it helps you see patterns and connections across different books. You'll notice that the same principles keep coming up in different contexts, and that repetition is what makes the knowledge stick. Let me address the obvious skepticism. You're thinking, this sounds good in theory, but can reading really 10x my money? Isn't that hyperbole? And fair enough. Let's do the math. Let's say you currently have $50,000 invested. If you're an average investor who doesn't read, who makes emotional decisions, who pays high fees, who buys and sells at the wrong times, you might average 5 or 6% returns over the long term after adjusting for all the mistakes and fees. Over 30 years, $50,000 at 6% becomes $287,000. Not bad, but let's say you build a knowledge base through daily reading. You learn to avoid high fees, saving you 1%. Per year, you learn to avoid panic selling during downturns, saving you another 2% on average. You learn to recognize good businesses and make better investment choices, adding another 2%. Now you're averaging 11% instead of 6%. Over 30 years, $50,000 at 11% becomes $1.3 million. That's 4.5 times more. And if you're consistently adding to that initial $50,000, if you're saving and investing more because your knowledge has taught you the importance of a high savings rate, the gap gets even wider. 10 times is not only possible, it's likely. For someone who builds real expertise through consistent reading versus someone who doesn't. But here's what's really happening when you read consistently about money and investing. You're not just learning facts, you're rewiring how you think. You're building what psychologists call schema, mental frameworks that allow you to process information faster and make better decisions. When you first start learning about investing, everything is effortful. You have to consciously think through every concept. But after reading 20, 30, 50 books, patterns start to become automatic. You look at a business and you intuitively sense whether it's good or bad. You hear about an investment opportunity and red flags pop up automatically. You see market movements and you understand what's happening without having to analyze it consciously. This is expertise. And expertise compounds just like money does. Warren Buffett has talked about how his investment style hasn't really changed since he was in his 20s. He learned the core principles from Benjamin Graham, and he's just been applying those same principles for 70 years. But his results have gotten better and better over time. Not because the principles changed, but because his pattern recognition got better. He's seen thousands of businesses. He's lived through dozens of market cycles. He's made mistakes and learned from them. And all of that pattern recognition, all of that accumulated wisdom, it came from reading and thinking every single day for 7 decades. You can't replicate 70 years of experience, but you can start building your own pattern recognition today. And 20 years from now, 30 years from now, you'll have a knowledge base that most people will never have. And that knowledge base will be worth millions. Let me give you one more reason why this habit is so powerful, and this one is subtle but important. When you read consistently about money and investing, you start to see opportunities that other people don't see. You develop what's called informed optimism. Most people are either blindly optimistic, thinking everything will work out without understanding why, or they're pessimistic, thinking the system is rigged and they can't win. But when you understand how money works, when you've read about economic history and market cycles and business fundamentals, you develop a third perspective. You see that yes, there are real opportunities to build wealth. No, it's not easy or automatic. Yes, it requires knowledge and discipline. And no, most people won't do what's required, but you can. And that informed optimism, that rational confidence based on knowledge, that changes everything about how you approach financial decisions. You stop being afraid of investing because You understand what you're doing. You stop chasing get-rich-quick schemes because you understand they don't work. You stop making impulsive decisions because you have a framework for evaluating choices. You stop comparing yourself to other people because you understand that wealth building is a personal journey with a long time horizon. All of these mental shifts, all of these changes in perspective, they come from reading, from exposing yourself to how successful people think, from building your knowledge base one page, one chapter, one book at a time. So here's what I want you to do, not tomorrow, not next week, today, right now. Decide that you're going to commit to 20 minutes of reading every day for the next 30 days. Just 30 days. That's not a lifetime commitment. That's a trial. Pick one book from the list I mentioned. The Psychology of Money is a good starting point if you're new to this. It's readable, it's engaging, and it teaches fundamental concepts. Set a specific time. First thing in the morning is ideal, but if that doesn't work, find 20 minutes. Whenever you can protect them, maybe it's during lunch. Maybe it's before bed. Whatever time you choose, put it in your calendar. Treat it like an important appointment because it is. It's an appointment with your future wealth. And here's what will happen. The first few days will feel strange. You'll be tempted to skip it. You'll think of other things you should be doing, but push through. After a week, it'll start feeling normal. After 2 weeks, you'll start noticing that you're thinking about money differently. You'll hear something on the news and you'll understand it in a way you didn't before. After 30 days, you'll have read one complete book, and you'll have built a habit. And if you keep going, if you make this a permanent part of your daily routine, you will have built something that most people never build. A genuine expertise in how money works. And that expertise, that knowledge base, will compound for the rest of your life.